All right. Good evening, everybody. Welcome to our Calgary Real Estate Wealth Investment Seminar. We've got a really good one today. We're going to find out where prices are going in the fall. We've all been through the summer and the spring where prices were crazy. There was lots of competing offers. Well, the market we're seeing right now, it's changing. It's going into the fall season and prices are going to be affected a little bit by that. We're going to go over all the factors why and what we think prices are going to do.
Yeah, and the reason why we do this is so you guys can keep on top of the market. Either you haven't taken action and bought a property yet, or you own rental properties, or you want to grow your portfolio. So we do this every 2 weeks, Tim. And the reason why we do it is to help you guys out so you feel comfortable with your real estate assets.
So moving along, how much will Calgary prices go up this fall? That is actually kind of a loaded question. Are they going to go up? How much are they going to go up? Might they even go down? Well, we're going to go over lots and lots of factors. What we think is going to affect the market, and it will affect the pricing one way or the other. Like I said, Calgary prices may go up, they may go down, or they may stay flat. The fall is actually a very short period of time between now and the new year in real estate terms.
Yeah, and for the new people that just moved to Calgary, the leaves really fall here in Calgary. This goes for 2 weeks. So once those leaves turn, make sure you get your cameras out and take some pictures because it's done pretty quick.
By the time Halloween hits, there's no more leaves on the trees. But what we like about the fall is inventory generally moves up a little bit and our buyers have more choice. Plus, we know that in the spring, there's always going to be a boom. It might be a big boom, it might be a mini boom, but we know most people want to buy their houses when the flowers start to come out, the trees are green, everybody's getting ready for summer. That's when most of the sales happen. It goes on a bell curve where the peak of the sales volume is right around June, and then it starts to fall and it reaches its trough in January.
Yeah.
So most of the buyers are buying in the spring. So right now, if you're out there and you're getting a great investment property, you're not competing with a ton of other buyers.
Yeah, and the difference between the fall and in the middle of the winter, just for everybody out there, listings generally come off the market. People don't want their homes for sale during Christmas or the holidays. So properties normally come off and there's less to choose from. We're not saying you can't get a good deal in the winter, but you definitely, Tim, have less choice. So the fall is a very, very good time, to be shopping for real estate.
Yeah. So what are some of the factors that affect prices in Calgary? We're going to go over these things on a number of the next slides in more detail, but Calgary is a growing, dynamic, young city. Our population is well below the average population across Canada. We have a lot of very educated residents in this city. So our median income tends to be a little bit higher in Calgary than it is in other major cities across the country. What else we're going to talk about is where interest rates headed. Are they going up? Are they going down? We have to depend on what the Americans are doing. The Fed's going to have an interest rate decision coming up here in the end of this week, I think. So that'll be interesting to watch. Should you buy before 2025? We talked about a little about that in our market report, that in the spring of every year, there's always a mini boom. So if you get in now, you're not competing with as many. Will rental rates rise or fall? We're going to talk about that as well. And how high can prices go this fall? We'll talk a little about how high they're going to go next year as well. But once we get into this, we'll be talking about all of these factors that affect the prices in Calgary right now. And in this fall season, what we found is the buyers that are ready to go, they might get a deal.
Yeah. Just speaking to this couple behind this slide here, you can just see it a little bit, but just speaking to what kind of deals are out there, Tim, right now. This couple, we bought a Jasper floor plan of Sloka Homes in Aspen Woods. And Aspen Woods is a premium community in Calgary. It's got boutique shopping around there. It's got 4 of the best, most expensive schools in Calgary or in and around there. And then you have the C train up there, you have Westside Rec. There's a lot of things going on for Aspen right now, especially with the shopping that they're going to come. But this couple here, if you go on Sloka Homes, the Jasper floor plan is selling for $480,000 plus GST. That roughly works out to about $505,000, around that range. This couple here picked up a beautiful townhome in Aspen. We jumped on it for 440,000. Is that what he said? 435,
Yeah.
440. Sorry, 445. He bought it for 445,000 and has instantly created $50,000 or $55,000 worth of equity straight off the bat because comparable properties are selling for $55,000 more. So can you get a deal in this market? Of course you can. And you know what this couple did, and they came to us, Tim, looking for suite of properties, and they have 2 kids, another one on the way, and we kind of said, hey, they already have 2 suite properties. And so we kind of said, you know what, you should get a townhouse. The townhouse market has gone up 17% this year. It is nowhere near where it should be. The average townhouse, Tim, what is it right now? I can't even remember.
I think it's
Like
485.
485, the average townhouse price. And when you look at Toronto, Vancouver, the average townhouse price in a premium community would start upwards of $800,000. So there is a lot of room for Calgary to expand into.
Yeah, so before we turn over the slide, Sammy's got a question in the chat. What's the gap in price point from trough to peak, fall to spring? Well, the gap,
That's a good question.
could vary. It depends on, market conditions, depends on the economy in the country. We're going to talk about pricing specifically further along in the slideshow, so we're not going to give away any surprises right now. But when we talk about that, we'll tell you where we think prices are going to be and sort of the spread in that drop.
Yeah, and there's different, you got to remember, Sammy, there's different segments of the market that are really taking off right now. And there's reasons behind those segments as well, which we'll get into.
Okay, so we're going to start looking at some of the factors right now. The number one factor, whether you like it or not, in Calgary that affects our economy is oil and gas. If you look at Canada's oil and gas industry, and when we talk about that, the majority of it is right here in Alberta. Yes, BC and BC and Saskatchewan and Newfoundland also have healthy oil industries, but the majority of the oil produced comes from Alberta. Canada is the 4th largest global producer of crude oil in the world. So we produce a massive amount of oil. Like it or not, it really, really helps our economy. It's one of the reasons why we're avoiding a recession right now, because the massive amount of oil that we're selling on the world market, most particularly to the United States, but a little bit on the world market as well. The Trans Mountain Pipeline recently got completed, so we now have the ability to ship our oil straight offshore. Although what I've heard is that most of the oil is just bought by California and Oregon anyways.
Oh,
So
really?
it's not actually going over to Asia. Because it's heavy oil, the world needs it for things like asphalt. If you want to build roads, you need heavy oil. You can't use sweet oil, which is the stuff that comes out and it looks almost like the oil that you pour into your car. You need that heavy oil for industry, for things like asphalt, and we have a ton of it. LNG, Canada's one of our export facilities in Kitimat. Our LNG export plant is just about done. So we will have the ability to export liquefied natural gas across the ocean to Asia. That's going to come online soon. And once that does, our natural gas will be able to get world prices as well. So we've got all of these things going for us in the oil and gas industry. Calgary and Alberta are situated perfectly to reap the rewards of selling our natural resources overseas. So that's the number one thing. And then let's move on to crude oil production. If you look, this is for Canada as a whole, our crude oil production over the last way back to 1975. And if you look at 75 to about 2008, 2009, we were producing roughly the same amount of oil over all that time. After the worldwide financial crisis in 2008, our oil production took off, and you can see it's almost a straight line up to almost 4.5 billion barrels. Barrels.
It's doubled.
Yeah, 4,500 barrels per day. So it's doubled. Went from
in a short period of time too.
Yeah,
14 years.
So what we're doing is we're getting more efficient producing oil out of the oil sands. That's roughly when fracking came in.
Mhm.
There's a lot of that going on as well. The American oil production, the US is the #1 producer in the world, by the way. And they started fracking and their production just went through the roof as well. But what relates to this is the demand for oil around the world. It's still going up. We've been hearing rumors of peak oil since 1970, and we haven't seen it yet. So as the demand continues to go up, Canada can supply more and more oil to the world, and we can reap the benefits through our governments to pay for our social services, to keep our standard of living as high as it is. All right.
Yeah, perfect. If anyone has any questions about anything, and it could be related to community or type of housing, just throw it in the chat, we'll get to it.
Okay, so not to keep the people who are anti-oil out of this discussion, renewable energy is also on the rise, and particular here in Alberta, wind and solar. Canada has the best wind and solar resources in the country, or sorry, Alberta has the best wind and solar resources in the country. You can see in this little graph that came from the Pembina Institute, this little pictogram, Canada is really, really well situated for wind. Everybody knows it's windy on the plains, and Alberta has more wind in viable locations than say the East Coast, where they're susceptible to maybe hurricanes or gales and stuff like that. So that's why you're seeing wind farms pop up all over southern Alberta. Solar, same thing. You can see in the southern prairies, just a massive amount of sun hits us. Calgary is one of the sunniest cities in the world. You can go down in the southeast part of the city by Mackenzie Town there. There are massive solar farms that have gone up in the last couple of years. In southern Alberta by Brooks, there's a massive solar. They're just going up all over because it's sunny all the time here.
Yeah.
So for the green people out there, that's a positive. Our green energy resources are growing, and Alberta is contributing more to that than the rest of the country. Yes, those bigger provinces have hydro. We don't have a whole lot of rivers here, so we don't have a whole lot of high capacity to produce hydroelectricity. So we have to depend on wind and solar.
Quick question in chat. How is the CMHC multi-market in Calgary? Tim, why don't you talk about inventory just for a moment?
Yeah, okay, so
yeah, we're going to get into what's being built right now, but yeah.
The multi-unit market, especially if you're going to be purchased with CMHC approved financing. That means if you're getting CMHC insured mortgage on a multifamily property, you have to move into one of the units. So if you're buying a fourplex, you move into one of them, and you can put less than 20% down to buy that. If you're going to rent all the units out, it won't be CMHC insured.
Unless you do the MLI Select program, which you would be going in, you'd be doing the BRRRR on an existing apartment building and putting your own mortgage on there. The only thing with that in Calgary, what everyone needs to understand is Calgary wasn't built like Edmonton. Edmonton has communities, women communities of apartment buildings. We don't have that. I can only name one community that is really heavy built with apartment buildings, and that would be Sonalta. I mean, you do have Bridgeland,
Beltline as well.
Beltline, yeah, but they're high rises and stuff like that, so you're not going to get into that. But into smaller apartment buildings, yeah, it'd be Sonalta. But you know what? We've been running the numbers for our clients. We've got clients doing this right now. We've teamed up with a developer to use the MLI Select program. You're almost cheaper, or you're better off right now building your own. So that's going out, we're sourcing one right now, Tim, getting a large enough lot to be able to build, 8, 10, 12 units. And they're putting them up roughly. We're putting up townhouses with basement suites right now, roughly for $450,000 per unit, which has 2 units in it. So that's our numbers. The numbers make sense all day. Those things rent roughly $2,500 up, $1,500 down. So they're producing $4,000 income for a mortgage of $450,000. It's not a bad return at all. So yeah, the existing stuff there, you have to get creative to go in and do the MLI Select program, or as Tim said, if it's CMHC, it has to be 4 units or less. Once it goes to 5 units and more, it is
It's five or less for CMHC.
It's 5 or less for CMHC. But yeah, so 6 units or more, it is a commercial mortgage.
Yeah, the issue with that in Calgary is on the supply side. There is just no supply of these fourplexes, fiveplexes that are for sale. When they do come up for sale, the prices are just crazy. You can buy a fourplex in Forest Lawn and it'll be upwards of $800,000-900,000, whereas a few years ago, we were picking that same product up for 6.5.
Yeah.
So prices have boomed in the small multifamily market as well. So we've kind of stayed away from that because the numbers just don't work when you're talking about 4 units in $1 million building, and the units are not large enough to fetch, you know, the rental rates to cover your costs.
Yeah, so that's catch-22 there.
Just quickly on the right-hand side of the screen here, you can see the cost of wind and solar has come down as well. So that's helping in the development of it. Our Alberta government was a little hesitant to back renewable energy, but you know what? It doesn't have anything to do with the government in the long run. It's what the consumers will demand, and you're going to just see more and more of it as time goes on. Next thing, other industries that are making headway in Calgary. You can see I've got a list of them here. We don't need to go over every single one, but there are lots and lots of other industries. Calgary is no longer dominated by just the oil industry. We've got warehousing, we've got the film industry is quite big here. There's lots of technology companies that are coming in, setting up head offices or subsidiary offices. They're employing a lot of people that need to buy real estate as well. Medical and life sciences, the cancer center, Calgary Cancer Center at the Foothills Hospital, it's scheduled to open probably late October. So that's bringing in a massive influx of healthcare workers, and they're expanding the Peter Lougheed Hospital in the Northeast. There are all kinds of industries that are diversifying our economy, and they're all driving demand in our real estate sector. So you're going to see Calgary grow over the years. We're no longer just a Wild West, you know, with cows and oil.
Yeah, which is good to see. We needed that.
Yeah. Okay, we'll talk about the average home price. Affordability is one of the things that drives demand, and it has driven demand in Calgary in comparison to the larger centers in Canada. Newcomers are coming to Alberta. They're coming because it's affordable. And all you have to do is look at these average prices. Year to date, it's just over 600,000 in Calgary. You look down there at Toronto and Vancouver, you know, 1.1 and $1.2 million. That's their average price.
Yeah.
So if you're a newcomer to the country, or if you're if you're living in Toronto or Vancouver and you're younger and you can't afford those prices, you may want to move your family to a cosmopolitan city that has everything, but is half the price of what you're going to pay.
Yeah, it just totally makes sense, and it makes Calgary really, really attractive. I mean, we've seen the stories of people driving in traffic in Vancouver and Toronto. I read an article on one lady that had to go pick her kids up in downtown Vancouver, get them back, and then go back for school sports. She was in traffic for over 2 hours. I mean, in Calgary, that's almost non-existent. And they're even expanding our roads right now. We've got Stony Trail that you can get around anywhere around the city on, and Deerfoot Trail is actually getting expanded as we speak. So there's wonderful things going on to accommodate the growth that we're seeing here in Calgary, and we just feel it's going to continue.
Yeah, and we've also got, like it or not, we've got a lot of land. You know, yes, it's farmland right now, but it's a lot of land for the city to expand in. The city of Toronto and the population base down there in Southern Ontario, they're surrounded by the Greenbelt, which they're having a real tough time convincing the population that they should build housing on that Greenbelt. Vancouver is sandwiched between the mountains and the ocean. So there's only so far they can go. Plus, that's prime agricultural land in that Fraser Delta. And they cannot just wipe out all the farms and build all the land because it's prime agricultural land. We're not going to be able to produce some of the products that they produce in the lower mainland because they have that climate there anywhere else in Canada. Maybe Southern Ontario, but they're facing the same crunch like Vancouver. So affordability plays a huge factor in demand, and which affects supply, and it helps us determine where prices are going to go this fall. Just got to let someone else in there. Okay, we're going to move on to the average price. We mentioned the average price in Calgary right now is just over 600,000. If you look at the last 10 years, going back to 2014, there is a little dip right here, which was when oil crashed, when the Russians and the Saudis were getting into a scrap there. After that, prices continued to go back up. Where's my little cursor? He's gone.
He's got, oh, there it is.
Oh, there he is.
Yeah.
Anyway, so it moved up to 2017, 2018, and then we went into the COVID years. So right here, you can't see it anymore. But anyways, the COVID years, 2019, 20, demand, of course, went down. People were just sitting in their homes, not doing anything. After that, the price of housing is just starting to climb and climb and climb. But even though it's climbing so high, we're still half the price of Toronto and Vancouver.
Yeah.
So maybe not this fall, but we said we were going to talk about where we think Calgary prices are going to go. We think we should be at 750 as an average price. So that's all housing types within a year or two.
Yeah, it's going to get there pretty quickly, especially with interest rates coming down, population growth going up, just simple supply and demand. And Tim, we're going to get into it. I know I always jump the gun, but we're going to get into what they're building right now.
Yeah.
They're not accommodating homeowners out there, which we're going to get into. And what we mean by that, we'll get into, I won't get into it, but what I'm trying to say is we also had the rezoning policy. And once the rezoning policy came in, guess what happened then? Builders' lots just went through the roof, and we've had investors that were smart enough this year to jump in on those builders' lots because the land is so limited out there to build on. So those prices to get a lot anywhere, Tim, from 15 to 20 minutes from downtown, we're going to see those continue to climb just because they're going to be in such demand to build on down the road.
Yeah. Okay, we'll move on. Another slide on affordability here. As most of our clients know, Alberta has the lowest income tax rates in Canada. There's no provincial sales tax, there's no land transfer tax, and we don't have any healthcare premiums. So there's an advantage right there, which makes life more affordable. And we get this question a lot when we're shopping for clients who are moving from Ontario, and they could be in a high price range, and they're always worried about the land transfer tax. Because in Toronto and other centers in Ontario, that land transfer tax is paid by the buyer. It's not paid by the seller. Whereas in Alberta here, there's no land transfer tax and the commissions are paid by the seller. So there's very little, what would you call it? Yeah, there's very little cost to buying real estate.
In Calgary, right, in Alberta. But yeah, and we get that question all the time. Like when we have people investing from Ontario, they're like, well, how much do we put aside for closing? And when we tell them, like, you know what, your home inspection is like $500, your condo document review might be another $300, $350, and then your lawyer fees are probably going to be $1,500. So under $2,500 to close on a property, they can't leave it. And one other thing, while we're just talking about Ontario and different parts, even Manitoba. We know our clients who have rental properties in BC, they have trouble with the Landlord Act.
Yeah, the Residential Tenancies Act.
Yeah, so we're very, very landlord friendly here in Alberta, meaning that if someone doesn't pay you, we could get them out within 14 days. So, and Tim and I have been doing this for many, many years now. I mean, all of our investors get our training when they do buy a property, Tim. We haven't had to evict a tenant for the longest time, but if we really wanted to get a tenant out, we could get them out in 2 weeks and then release the property straight after that. So
yeah, we do train our investors on how to manage tenants the right way using our system. And the most important part of that system is tenant selection. There are professional tenants out there. And what's a professional tenant? It's someone who they'll come in, they'll move into your house, pay the first month's rent, and then they won't pay rent again. And it'll be a nightmare to try and get this person out.
Yeah.
In Ontario and BC, professional tenants are all over the place. There's it's a very rare instance to have one of those in Alberta because it is such a landlord friendly province. And these guys who try to build, milk the system and not pay rent, they don't last long in Alberta because, they know the system is against them. And
not only that, Tim, because all these new people are moving here, the quality of tenants you get to choose from is amazing. Like I've got people in one of my places, they're both in tech, they're earning like $150,000 per year, husband and wife with a small child. I mean, I would take them all day. I don't even hear from them. They're so good, right? And they can't buy because they're new to Canada. So perfect. There's really, really good tenants out there. And one last thing I want to touch on is the Tim, what do you call it? The rental rate increase or the
Rent controls.
rent controls. Yes, we don't have that here, and we know investors that had to sell in other provinces because interest rates went up so much they couldn't raise the rents. Right, where in Alberta, I think I raised one rent like $650 from the previous tenant. Now, we're not saying to go gouge people, but I actually told that tenant, Tim, I'm not going to renew your lease because unfortunately I could just get so much more. And I gave him the opportunity to pay, and he decided not to move out. And it worked out for everybody, and the rent jumped up $650. Where if you're in Manitoba or you're in BC or even parts of Ontario, there's no way you could do that. So that's one another factor there.
Yeah, and the last thing we're going to touch on affordability here is nearly half of non-home owning millennials are confident of their ability to buy in Calgary, whereas it's only 34% in Vancouver and 22% in Toronto. The reason that I want to mention this is because we get a ton of bad press being, the bad press right now about millennials not being able to buy. Well, we're here to tell you that in the past 3 years, we've had a ton of clients that are millennials, and they bought all over the city in a lot of different price ranges. Some of them have bought multiple properties. Cole and Tasha have 3 properties. They're under 30. Connor's bought 2 properties, both suited. We've had young women, on a single income buying townhouses. So they're buying their first home. Where there's a will, there's a way, and you don't need a ton of income to get into the real estate market.
Yeah, you only need to put 5% down if you're moving into it. So we're here to guide you young people out there. We love setting these kids up, Tim, the right way. Something that we wish we did when we got it. When Tim and I got into this investing thing, we went out and bought everything possible, right? We didn't care how much it cost. We just went and bought it, and we made mistakes along the way. And now these young kids, we could actually educate them and help them understand to run the numbers and what kind of tenants they're going to get and how to legalize a basement suite, and then use their equity to go and find another property and replicate it. And then they have a team behind them every step of the way. So it's a great way. And now I know Cole's on the call tonight. And Cole, I haven't forgotten, we do owe you a few beers, which we will pop by and drop them off. But anyway, someone like Cole, he was renting when we met him a basement suite up in Mount Pleasant, and then we bought him a property. He house hacked basically. While he was house hacking means you rent out the basement, you live upstairs. He actually did the reverse. Which is smart. He lived in the basement and rented out upstairs. While he lived in the basement, I think he turned that one into a legal suite and he renovated it. And then we moved him to Bowness. We got him a legal suite of property. He lived upstairs and updated the downstairs and rented that. And then now, guess what he's going to do? He's going to go get a 50-foot lot in Bowness. And now it's a builder's lot, and he can do whatever he wants down the road. He could turn this one into a legally suited property. He could just live in it, which he wants, which he may, because he's cash flowing on his first 2 properties. And then down the road, he can build a 4-plex with basement suites in them if he chooses to. And it's already happening in houses around his area. So very, very exciting for someone like Cole, and for the other kids that we're helping. Tim, they've done tremendous things, and they're getting in a position to go again. Right?
Yeah,
That's what's amazing.
So we don't want to hear any of this nonsense that millennials can't buy houses.
Yeah, we don't want
to. Can. Where there's a will, there's a way. We help you buy it. And mainly, the main thing what we have to do is help people delay gratification. You can't go out there when you're 25 years old and buy that 3,000 square foot home in the suburbs on a 60-foot lot that's worth $1.5 million. You got to start small. If you want to accumulate lots and lots of real estate, investment real estate in a portfolio, the idea is to start out small. And this isn't just for millennials, it's for anybody getting into the game. We've got new to Canada people that start out in a townhouse. You know, for a couple of years, they live in that townhouse, save up their money on a down payment on the next one, and then move into a suite of property, and then they move into their dream home.
Yeah, and for example, a live example, we just waived conditions on Coach Hill Townhouse. This townhouse, new to Canada, clients of ours, they came in, they could afford way more, Tim, than they could afford maybe 600,000-700,000. We asked them the end goal, and their end goal was to own multiple properties. And so we said, no, start them small. We went and got them a townhouse in Coach Hill for $339,000 in the same complex, renovated townhouse, the same size, sell for $428,000. So now we've set this new to Canada. I mean, they're highly educated people, Tim. They earn good income. We've set them up to actually buy this property. We're going to do some fix up so we rent it out. Then in 3 years' time, we're going to refinance that money back out. They're going to pull enough money out to do some more renovations. And we are then going to take that money and buy another property. And that's just using one person in the couple. So they met us, they're a couple. We used one person's credit, and now we're going to go use the other person's credit. So now every 2 to 3 years, we're rotating to buy more properties individually until they get married. Yeah. So it's a very good system. And you know what? That's starting someone off on the right foot. So congrats to those people for listening.
So speaking of new to Canada, that leads us to this slide about population. If you look at these numbers, some of these numbers are kind of crazy. From April 2023 to April 2024, Alberta's population grew by over 200,000 people. Now that's massive when you look at the size of our province. That's 4.41% in 1 year. And the rest of Canada, it was only 3.2. So we're leading the country in population growth in Alberta, partly because of affordability, partly because of quality of life, partly because of availability of our housing, tons and tons of factors. But the number one thing would probably be price. And if you look at our international migration, the second line down there, first quarter of 2024 alone, international migration added almost 33,000 people. So that's people from outside of the country. The next one down is from other provinces. Net gains of people. Oh, sorry, that's 2022 to 2023, the latest stats that StatsCan has. Calgary gained almost 27,000 residents, and Edmonton gained 16,000. So we're looking at massive amount of people coming in like a 12-month period. If we look at 2024, it's probably going to be larger numbers than that because we're seeing it. We're seeing more and more of these people coming in.
And Tim, I want to say something because we did buy a property up in Citadel for one of our clients, and I remember being there. I went out to help her get it rented out because she's single, female, and that's what we do for our clients. Anyway, and when I was there, I met people that wanted to rent the condo, and they were coming down from Edmonton at that time because they just couldn't find a place here in Calgary. And then they decided actually to go back to Edmonton because they couldn't find a place in Calgary. So what's happening in Calgary now, a lot of the rental properties that are coming on, there's more supply. So you will get that increase because there's places for them to live. Yeah. You know what I mean? And one thing about Edmonton that I got to tell you guys, I know I'm going to get emails about this or phone calls. I don't feel that Edmonton is going to survive this uptick. I think when you see ups and downs in real estate, I think Edmonton's going to be a place that it drops. And the reason why I say that is because Edmonton is not Calgary. Calgary is like a leading, even though Edmonton is the what do you call it, the capital of Alberta.
Edmonton has a lot more government jobs. Calgary has a lot more corporate jobs.
Yeah, and I just don't see it. I don't see it working. They have. I don't think when I say not working, I don't think the rents or the rental rates in Edmonton can survive the increase in price in the price point for investors to make those numbers work on those properties up there. And we get this question all the time. is Edmonton better? Is Calgary? And we would be the first ones to tell you a few years ago, we were looking to build an apartment building, not build an apartment, but buy an apartment building with one of our investors, Nico, up there in Edmonton. And Tim, we thought it was really affordable at that time. And now those prices have gone through the roof. But I don't feel that the rental rates can continue to go up because people can't afford it there or as much as Calgary.
Yeah, yeah, so Edmonton has a larger homeless problem as well because the rental rate has gone so high. And like Azad said, can their economy sustain the increase in rental rates year after year after year after year? We don't know about that. They are right now. Right now, it's working. But for investors out there, will it work for the next 3 to 5 years? We don't think it's going to work as well as it will down here in Calgary. Right, moving on. If you look at the jobs graph, this one goes back all the way to the 1970s. So there'd been a steady increase in job growth in Alberta right up until COVID. COVID is the dip right there. You can see the job market went off the rails, but since then it has gone and surpassed pre-COVID levels. That helps our that's a reflection of the population growth and the diversification of the economy in Calgary, or sorry, in Alberta. So you're seeing this employment increase. So the average from January to August of this year, got to move this thing 3%. So, you know, compared to before that, we're seeing a 3% increase in job growth year over year. It's just massive, and it's a reflection of the population coming in. So that is also going to directly affect the housing market, and it's going to directly affect pricing and how our investors do. What you want is a fairly stable economy with lots of job growth, which means there's going to be a lot of rental rate growth as well. Once you go into a recession type economy and the jobs fall off, guess what? The renters start to find cheaper places to live. Yeah. And we've been through it. We've been through it many times. We've been through the financial crisis. There was also the dot-com crisis at the end of the 90s, COVID, and the oil price crash in 2015. So we've seen demand for rentals fall off very quickly, and rental rates make an adjustment. And you just have to be prepared for that.
Yeah, so you cannot buy at the property. I want to stress that. That's where most people get in trouble. They buy at the top, they're banking on current rents, and then when current rents drop, they're not cash flowing, and then it's hard to survive. We always say this: if you're pulling money out of your back pocket to support your investment property, it's not worth it. Your days will be limited as an investor. You want to run it off worst case numbers, and we're always conservative on our rental amounts and our appreciation rates. And so our investors already know when they're buying with us, they already know their comfort level is good, and that if they get a bit more and it appreciates more, that's just a bonus.
Yeah. Okay, so let's talk about housing starts now. We got this right off of CMHC's site. In the first 6 months of this year, Calgary had over 11,000 housing starts, and it's up 38% over the same period last year. Edmonton's housing starts were up 67% in those first 6 months. So what we're seeing is, because prices went so high, supply went down the tube. All these builders adjusted. They were quick on their feet. They're starting to build houses. Small apartment buildings are going up. Duplexes are going up. Single family homes are going up. You're seeing this construction industry turn on a dime, and massive amounts of housing is being built. In the first 6 months, there were over 21,000 housing units across Alberta. That's huge. Yeah. To just all of a sudden, rally this whole construction industry and build these massive amount of houses. That's not a small number when you're talking about, all the roofers and on framers and the plumbers and the electricians you got to get these things built. Down near the bottom is one thing that we're really, really looking at, is the rise in purpose-built rentals. If you look at the numbers here, they're making up 33% of all the housing starts. And we've had more purpose-built rentals being built in the last 3 years than the previous 15 years before that.
That's crazy.
Yeah.
That's crazy. So we know a lot of people are moving here, but you just have to really keep an eye on. And one thing, Tim, we just bought a place in Aspen. So for example, we just bought a townhouse in Aspen for a client. And we know Aspen for the next 3 years, you would say, there's going to be purpose-built rentals around in there on Aspen off 17th Ave. And so you just have to watch that supply, right? But Tim, we're really not seeing high rises downtown being purpose-built, high rises going up.
No, but you're seeing the conversions, right?
Yeah, you're seeing conversions. And then what we're seeing
The
is
office to residential.
yeah, there's like, I think there's 17 of those in the works right now, 17 buildings being converted from commercial to residential. But what we are seeing, Tim, is places like out near Chinook Mall or on 37th Street, where they take out, we love seeing this stuff. They take out like a whole block of houses and they put in purpose-built rentals. So that's going to continue. And you just have to make sure if you're buying in those areas, just to be wary about that, because it will impact rental rates in those areas. But Tim, we were just discussing the brand new properties that they're building, the rental rates are so high because they're brand new.
Yeah.
So there is a difference between when, you know, a brand new property to an old property. So you got to keep that in mind as well.
Yeah, and just to talk about maybe the BRRRR strategy or a flipping type of strategy where we've seen people come into some of these older buildings and renovate units in these older buildings to look like these purpose-built rentals. So they'll have an interior that looks just like a brand new unit. It'll have, you know, the nice countertops, it'll have nice flooring, nice paint, nice baseboards. The washrooms will be updated. It'll look just like a new unit, but you've purchased it for quite a bit less and your carrying costs are quite a bit less than as if you bought a new one. So your rental rate will be lower, but you will attract tenants that maybe can't afford these purpose-built rental rates. I mean, some of those units, there's a building down by the Shaughnessy shopping area in South Down McLeod Trail it's a purpose-built rental, and some of the rental rates in there's 3 bedrooms going for over $3,000 a month. The 2 bedrooms are in the high 2s. So those units are still only 700 or 800 square feet for a 2-bedroom unit. If you have a larger, older unit with the same interior, you could probably get the same amount of rent or a little less, but your carrying costs are going to make it cash flow.
Yeah, Sammy's just asking, he's a lot of purpose-built rentals in Skyview. Any suggestions? Sammy, the only thing you could do is drop the price. And we're going to be honest, it's the only thing that if you're competing against, you know, 40 other units that are on the market, you got to make yours as attractive as possible. We do see, just on a side note, some people furnishing their apartments and renting it out as a furnished apartment, I guess, executive rental, and you can achieve upwards of $500-700 extra per month for rent on those properties. So that's something you might want to look into. Our clients furnish their properties anywhere from $7,000 to $8,000 using IKEA furniture, Wayfair, Amazon, all that sort of stuff, Kijiji. And the other option you have, which could help you, is rent to own. We've seen a slight uptick in rent to own properties coming up, and that you have to keep in mind that if you are doing a rent to own, someone will pay you a deposit and then rent credits above the rental amount, and you would have to have an agreed sale price. And it could be a 1 year, 2 year. Tim and I have done these rent to own agreements up to 5 years. So, but you may lose a property to a sale, which isn't a bad thing sometimes.
Yeah, and what we have to do is we look back at other times where there was too much rental or too much supply in the rental market, in particular pockets within Calgary. And we have some of our investors just get creative with the incentives that they offer. You know, they could throw a big screen TV in there and offer free Wi-Fi.
Yeah.
So there's little things that you can do that might be a little more attractive than, say, next door units that are just pure balls.
We love the TV because the TVs are so cheap right now. And guess what? Every tenant has out there a big TV. So if you help them out and put a new one in there, it may get your property rented.
And the free Wi-Fi, maybe if it's just an apartment building, you can cover that electricity bill Normally they pay it, but you look at whatever incentives you can give those tenants to make your unit more attractive than those purpose-built rental units.
Yeah.
All right. The final thing we're gonna look at is the quality of life in the city. We see, people come from Ontario and they go, well, what do you have in Calgary here? There's nothing to offer really, right? Well, what we, see is to speak to people who have lived here a long time and people who get outside and do stuff. It's a great place to raise kids. We've got all the schools, we've got universities, there's daycare facilities all around the city. Public transit is well funded and clean, relatively. It's getting better and better now since COVID. The Green Line, it's stuck in limbo right now, but that's okay. There's bus routes that go down there. There's bus rapid transit that goes down there. So we have a vibrant arts and culture scene. There's, theater, opera, whatever you're interested in, whatever type of entertainment you're interested in, Calgary has it.
Yeah, it's getting better and better.
And there's zones within the city. There's 17th Avenue, the Red Mile. People, there's all restaurants and bars, and all the young people go there. Marda Loop, Kensington, any of these areas, where you would want to live. There's tons of great rental areas around there.
Yeah, and just getting back to that Skyview question about rentals, Tim, for years we weren't buying downtown here because there was an oversupply of rental properties. So we just knew that if we did buy downtown, it was going to be hard to buy. And so what did we do? If people came to us to buy investment properties, they wanted a condo, we would go into areas that Tim is talking about that offer these kind of interests or activities like restaurants or pubs or Starbucks. We would go into Bridgeland, or we would go into Lower Mount Royal or Mission, because people can walk down, or even Bankview, people can walk down to 17th Ave and have a good time without driving. There's little pockets, as Tim said, Marda Loop, Kensington's one of the best neighborhoods because the C train goes through there. You can walk to work, you can ride to work, you can catch a train to work, you can catch a train up to the university. And so it's perfect. It's like a little village. And the other one that's coming up, Tim, that we know the kids like is Inglewood. We didn't realize this. Inglewood is becoming trendier and trendier. It's got little breweries in there. It's got little restaurants. And the kids like living there because they can rent these scooters like these guys going by here right now. They can rent these scooters and not even have a car, right? So you got to understand where Calgary's going. And you look at the future of these communities, like somewhere like Bowness, Tim, they've already upgraded the main street. You'll see new businesses coming to the little, as Tim always says, Bowness back in the day was a town. And you'll see that just get enhanced over time, and you'll see more popular places going in, and then it becomes more enjoyable to live down there.
Yeah, so the quality of life in Calgary is very, very high. One of the biggest factors that people enjoy is the proximity to the mountains. Whether you're a hiker or a camper or you're a skier in the wintertime, we're only an hour away. And Banff, Jasper are world renowned for their tourism facilities. So being very close to something like that really helps in the quality of life. And it's just something that whether you're a homeowner or whether you're a tenant, it will enhance your like of living in the city.
Yeah.
Okay, so where do we think prices are going to go this fall? We narrowed it down to just this fall on this slide, because if you looked at our numbers earlier, prices are still going up, but we think they're going to flatten out a little bit in the rest of this year, the rest of 2024. So overall, when 2024 ends, we figure Calgary is going to have maybe a 10% increase.
Mm-hmm.
Now, if you were to tell us, in the early 2000s that 10% per year was going to be the increase,
yeah,
we would love that, because to own a $400,000 house, that means you're going to make $40,000 every single year.
Yeah.
Right? Now we look at 10%, and some people are disappointed because it's not 12. Well, Calgary's 75-year average is 3.5. So, we're almost 3 times that right now. Take it while you can get it, because we've seen the market turn and there'd be a downturn for a couple of years. But that's where we think it's gonna go in the rest of this year. Now, going into next spring, that's a different factor.
Yeah, we think it's gonna be a beast.
Yeah.
Just because interest rates will be coming down, maybe another 1% by then, Tim. That's huge. That would bring so many people into the market just because rental rates went so high, right? You have all these new people coming in. They've been living here for a couple of years now with that population boom we've gone through, and now they're going to get sick of renting. Okay. And so what they're going to do is flood the market because now interest rates are down. There's some stability. We know where interest rates are heading. Inflation, they've got a hold of it. And so the market will just go crazy again in the spring. So that's what we think is going to happen, Tim, in the fall, meaning that if you are thinking of investing in real estate, it's going to be more enjoyable. You won't be forced to overpay on some properties. You might, prices aren't going to come down. We don't feel they're going to come down, especially with a few segments. The townhouse market already went up 17% this year. The condo market is up 14%. Those two markets, and then your builders lots or your suited properties out there. We know this because every suited property we go to buy these days, we're going into multiple offers and we can't buy them. So if you own a property, we would, and a rental property that doesn't have a suite, put a suite in because people will just pay a premium to get it. I mean, we went after this thing in Ranchlands on the weekend. We went 25,000 high. We didn't even want to pay that much, because we need to update the kitchen. We need to do work update the kitchen in both upstairs and downstairs, remodel a bathroom. I think our renos came to about $30,000, and we're like, we're not paying $650,000 at this stage for this property in Ranchlands, where we could go. And sure enough, a property came up that we've seen, and it's a nicer property that we can get cheaper somewhere else. So you got to cut it off at one stage. So rental properties are in demand, townhouses in demand, condos are in demand, and then builders lots, anything a 50-foot lot in an area where they're already putting in infills right now. That would be Millionaires, Ogden. They're just too expensive, Tim, on the west side. I don't even know where to go now to get, you're looking for Alejandro right now. You're paying, if you're not in Bowness or in Ogden, you're paying upwards of $800,000 on a busy road in places like Altadore or South Calgary or the Glens or the Glens. And if it's a corner lot, my goodness, it's upwards of $900,000. So, you know what? The demand is going to be there throughout the rest of the year for those types of products.
Yeah. So for the next 3.5 months, like we said, we're seeing a softening of the market a little bit. So if you're looking to get in, now's the time to get in, because if you wait until spring, you're going to be competing with a ton of other people. So that's our prediction for the fall. We wanted to let you guys know, because we see a change in the market. And again, next spring, we're going to see that reverse itself again, and prices are going to go crazy. So that's what we think is going to happen to prices in Calgary in the fall. I hope you got a lot of information out on that. If you really, really want to delve into it deeper and you want to have a meeting with us one-on-one, just give us an email. We'll have our contact information later on in the slideshow. But if you want to discuss where you think it's going, what you think the value of your rental properties or your home is, we're more than happy to discuss it. We live and breathe real estate, so when we're talking about it, it makes us happy. Yeah,
we're in our downtown office every day, Monday to Friday. We have free parking in the back, and we have clients drop in all the time just to work out where they're at, where they want to be. But Tim, we'll move on to the next slide here. As we promised you, you get for attending, you get our free ebook, 1 Million Reasons to Buy Real Estate. It does go through the core fundamentals of investing in real estate. It's a must read. If you're getting into this game, it teaches you everything you need to understand before jumping in.
Yeah, and it's quick. It's a short ebook. You'll get tons of information out of it. Just download it and it'll help you out.
Yeah, so that is on, put the website up there. Fearless Real Estate, this is the book we wrote during COVID. We're so proud of this book because we went through a lot of the stories our clients have gone through over the years, and for myself and Tim, what we've gone up to. And it goes through different things like doing joint ventures, buying properties with other people. It talks about, it has a chapter just on raising the right capital and getting the right financing. We go through flipping houses, what it takes to legalize a basement suite and how much money you can make from it. As we were saying, people are paying a premium for basement suites right now, and we've legalized a basement suite for $2,500. So some of these basement suites out there don't take a lot of money to actually legalize, and the value, the after renovation value, can be $60,000 to $80,000, which is unbelievable. And as we said earlier in the presentation, there's people making, like Justin and his wife Rachel were on one of the slides just on Friday, took possession in Aspen and created $50,000 worth of equity in this market. We're actually releasing a video on them in the next couple of days here on our Crew TV. So you can see for yourself how normal those guys are.
Yeah, and all these little squares on here, those are our real clients. The stories are in this book are about our clients in their words sometimes, and it's about how they made money using various strategies, investing in real estate. And it's funny because we took possession of a house the other day, and the guy looked at it, he goes, "Hey, there's Jamie." So he recognized one of his co-workers in the little tab here. So, you know, we're starting to expand. If we had to do a cover like this, the number of clients who have bought and read our book would be so small you wouldn't be able to see them.
Yeah.
So if you want to be one of these tiles on this book, reach out to us and we'll help you buy some real estate.
Yeah. Different backgrounds, all different ages. There's single parents, single mothers. They're from all different job types, right, Tim? So if you want to invest in real estate, we're here to help with that. Okay, the next thing we want to tell you about, which we're super excited about, is our mentorship program. It's $97 per month. You cancel anytime. We never really wanted to gouge people with this education. We can tell you that we took a similar program for $17,000. And you get all of that information. Is over 100 hours of material on our course. And not only that, it comes with our new Crew property leasing. So if you do buy this program and you're paying monthly and you want us to coordinate the leasing services on your rental properties, you get that per door for $97 per month. Nobody is charging that amount. Normal rental property, just rental properties alone, normally at 10% of gross rents. An average 2-bedroom goes for about $2,200 in this city. So that's a good savings. It's 50% savings on your property management, and you get the mentorship over 100 hours of content, Tim. And there's forms in there. There's joint venture agreements. There's leasing forms. There's seller and buyer guides in there for investors to understand how to analyze your next investment. There's a whole bunch of other stuff in there that you get. Just the joint venture agreement that we've drafted by our lawyers in there is a $500 value. So as you can see, we're basically just covering our costs on it, and we simply do this to help you move forward. Okay, we didn't want to really gouge people with this sort of stuff.
Yeah, so the next thing that you can take advantage of is our Crew TV channel. It's our Calgary Real Estate Wealth YouTube channel. We go through all kinds of interviews with our clients using different strategies. We talk about all the different real estate investment strategies, flipping, the BRRRR strategy, Airbnb arbitrage, alternative strategies like rent to own, lease options, everything real estate investment related. We've done an interview on it, or we've got a video on it. Tune in, you can learn tons of stuff. And we've even got some of our past seminars on there. So if you missed the seminar and you want to see if we put it up there, just dig through that channel and you'll probably find that seminar on it.
There's 300 videos on there, and it's free education. You should be looking at that for sure. Okay, so if you like tonight, please go to work tomorrow and tell your friends about us. We'd love to see them in 2 weeks' time. We will be hosting another presentation. Thank you for joining us. If you feel like you want to move forward with investing, simply send us an email. That is the best way to get hold of us. And we can set up a meeting. No obligation at all. We can do it by Zoom or in person. And would love to work with you and help you make money from real estate as well.
Yeah, so we want to thank you again for joining us with the seminar. It was a ton of information in a short period of time, I know. Again, if you want to learn more, give us a call or an email, and we'd be more than happy to help you out investing in real estate. Good night.